Hello, everyone. I hope that you're great. I hope you're fine. This is JCFX, and I'm your brother and your friend. Yes, I'm here today, and I just want to show you things that would be of help to you, as it is already helping me in the trading space. Okay, very quickly, I was told that um, the market is fractal, and of course, I got to see for myself that it was actually fractal. It is fractal, and I took advantage of that. Instead of waiting for opportunities in the higher time frame, I moved over to lower time frame. So I trade lower time frame in full, regardless of bias. I use my lower time frame to just determine my bias at that time. I don't go to the higher time frame to determine bias because I'm trading short. I'm not trading, not a long trade, just a very quick one. Hit my TP and get to my entry, hit my TP, and that is what I've been doing. I started this week, but though I've been testing this particular strategy and I realized that it is working very, very fine. In fact, that is exactly how market behaves. So very quickly, I'll be taking you there. So I'll take you to the first one, which is USD card. I'll take you to USD card so that you see. So after showing you all of this, I will take my time to start seeing if I can teach as many people as I can. Now look at it. If you look closely at this market, you discover something. This is where it all started. First, the market will get to a particular high that it will start forming. You'll notice shape to start forming. Let me do it like this. Can you see? When it went to this, I look at the behavior. It started behaving this way. And can you see? Can you see now there's a low here? It took this low out. Immediately this low is taken out now. Now to some extent is acting as if the market intend to go, sorry about that, the market intend to go down at some point, and that is exactly what it is. So it took this low. Can you see? This low was taken out by this, and look at it. When it was going, a low was formed, and then it went up, and the low was taken out. You can see now. So this low that was taken out, this is what I usually do. Then I will mark. First and foremostly, I will mark. I'll take my time to keep teaching as much as I can. And every day, anytime I take trade, I will bring it here and I will analyze it for understanding. Now look at what I will do. Then the next thing is for me to then mark this place. This is what I do. After marking, then I will also mark. Now I'm expecting the market to, after taking this, I'm expecting the market to break this. You get that this particular low created this high, and the market is expected to take out that high. So the high was taken out. Then I'm expecting a confirmation, but there was no confirmation because of this gap. So the market had to come here first. Are you getting it? So now this gap is what would that tend to pull the market backward. You can see that now. So what I would now do next is a very simple thing. It does not need too much knowledge of the market. Though I've spent a lot of time, so I'm not good at what's it called, all those terminologies and the rest, but I know what I'm doing. So this is it. Then this is what I'll do. There's a gap there, and that gap now is just like a fair value gap, a very big gap that happened during the weekend. So then the next thing is for me to look at. I wait for the market to react. Can you see? The market started reacting at that stage. Then the market came in and the market formed liquidity. Pay attention. There's liquidity that was formed here. The market formed resistance. Let me put it that way. But liquidity, if we must call it the right name, liquidity. The market actually formed liquidity. Then look at the market went down and then took out that liquidity. That's what they call the buy side liquidity. So the buy side liquidity was taken out. Can you see something? I'm sorry, let me, okay, the buy side liquidity was taken out. Sorry, I want to mark it so that you can see, so that you'll be able to see clearly. So the buy side liquidity was taken out. Can you see? It was taken out. Look at that. So it was taken out. So immediately that the market pulled backward. Can you see that market pulled down? Can you see that it pulled down because it has taken the buy side liquidity? So now the market is not after the buy side liquidity anymore because it has been taken out. So the market is now hunting for a low here. So look at that. Then the market now came down and entered this place. This is change of character. Can you see? So the market tap into and break and change. That's change the character immediately. That's break of structure, which is actually a change of character here. Can you see? So after this, now you expect the market to now return back up to fill that fair value gap that is very close to This is it, and it will lead to a pullback. It will create a pullback around this area. You can even mark it. Then you go ahead and mark. Can you see this? You mark. See, you can see. So you mark. Can you see that? You mark that spot, then put your entry, set your entry. You can see, then you can set your entry and stay around this area. Can you see? You can even put it around here. You stay around this area. You can choose to put it here because of spread, or you can put it here. Spread too matters because of the kind of account you are trading. If you are trading a zero spread, of course it's okay. If it's not zero spread, I will advise you put it around here, because this is like scalping, and it's the pips from, look at that. If you look, you see for yourself from the, you can see that now, from the entering to the stop loss is 7 pips. You can see it's 7 pips already. Then you can just, like me, I target just 2RR only. Can you see? I go for 2RR. That's what I go for. So I'll just target 2RR and leave the market like this. You can see 2RR. Anytime, once the market is able to break this low, pay attention. Once the market is able to break this low you're seeing, then put it on break even immediately. It should be, once it breaks the low and start going down, put it on break even as soon as, because there's a fair value gap, the market will tend to come back here. So there should be a break even, because if it eventually exceeds this fair value gap and goes above, that means the market has failed. That downtrend has failed. You understand? Because remember, this is a lower time frame, but it brings a lot of money. 2RR, you can risk 0.5% of your money. Take note of that, 0.5, and that is what I'm doing. Are you getting that? So that's all. You take this trade and you are out. You've made your profit. Now look at another one that I took. That's today. This one also the same thing. Let me load. What's wrong? Network. What is wrong with my network? What is wrong with my network? Yeah. Let me see. Network tend to be slow. Maybe I'm almost out of airtime or data. Let's see. Okay. Let me wait and see if it will load. Yeah. Now you see. Then the next thing is the other one. Today's trade I took. Can you see? The same thing again. Okay, let me check. Where is the trade of today? Yeah. Now the same. This particular one. You can see. Same thing again. Now what I did was that I, instead of using this, okay, let me mark so that you see again. Now I use this fair value gap because there's actually liquidity here. It was taken out. This is what I used. Are you seeing the market went up and then it started coming down? Now if you look at this market, you will know the way it's coming down. Look at the nature of it coming down. This is telling you that it's going to go down. The shape, if it's going up like this, don't take it. Don't even say you want to buy, want to sell. Like this is telling you that it will likely sell, so you pay attention. So now this is what I have said. Now the first thing was that the market actually, can you see this place now? And this place was broken. Can you see the market broke this place? So this particular liquidity created this high. So the high is expected to be taken out. Can you see? Now the high is taken out. Unlike the other one, it took the high and went above because of the gap that is there. So you will be patient. That's why we trade with confirmation. You don't jump in, and it will still be valid even if it goes above. As much as there's something else that the market is going for, you wait patiently. Now look at it here, the same thing. So the next thing, now look at me. I will just, this is what I will do. Look at what I'm doing. Then I'll mark this place. Can you see? After marking here, then the next thing is for me to also look at that. Look at that. There is liquidity inside this place again. Pay attention. The liquidity was taken out. Are you seeing? After the liquidity is taken out, then the next thing is to look for the nearest low, which is break of structure. Can you see? This is change of character now. You can see just the same way you saw that one. Then the next thing is that it will go up and look for a fair value gap that it will fill before going downward. So that is what The market does all the time. Can you see? Then you set it here. Then watch. You can put it here if your spread is low, because this is just 2 pips. Then go above. Above is better. Can you see? And remember, this should be taken in London or New York session. Don't take it outside of these two sessions. Can you see? 2RR. Then that's all. You take the trade and you are out. You can see you are out of it. So that is it. And there's another one again. Let me think. The other one I took one. Let me see. This was taken today. Yes, the other one actually, yes, the one I took today, EUUSD, it failed at some point because I don't know, though I don't know what happened. But I think the reason is because of the opening of New York session. That's the only explanation I have. Maybe the opening, because of the opening of New York session. That was what led to it. I don't know. Alright, so look at it here, the same thing. Now, this is it. This market look a little bit weird, but I just took the risk and I didn't make anything out of it though. Nothing. Now look at it, the same thing. Yeah, there's a very big gap here. So I believe that there's something. I believe that this is a change of characters or break of structure here. Then the next, that is what I think. So I took it like a risk. You get, because sometimes it's just like that. Then the next thing, look at it. This eye again. Can you see? Sorry about that. Let me use what I usually use. Please, you take your time and study all this thing. Look at it. The same thing. Can you see? The same thing. Are you seeing this now? All right, so this is 5 minutes. Take note of that. 5 minute time frame. Now you see, the next thing now is for you to look for. Now if this happen, then the next thing is to look at, I'm sorry, hold on, just trying to get something out. Can you see? You wait. This is buy side liquidity. Can you see? The market came down here and there's buy side liquidity there. The market had to go up there and take the buy side liquidity. Look at this buy side. Look at the way they are. Buy side liquidity. They were taken out. So after that, the next thing now, you look for a liquidity that can bring a change of character to the market. You allow the market to tap into that. Are you seeing? The market should tap into that liquidity. Look at it. After tapping in, then the market will return back. You see, this market will definitely return back. Then you look for a place where you would look at, see. So you put it around there, you put it, set it at that I, then target 2RR. Can you see? Target 2RR. That is what you're expected to do. So this is it. So what happened with me was that, like I told you, market tap into this place and started going. The market now break this low. Can you see that? Immediately the market break the low, put it on break even. That was what saved me. So during New York session, then the market just, like, there was no news, there was nothing. You get that now? The market just started moving with force, like strange force that I cannot even comprehend. The market started moving upward. So that was what happened. Yes, so these are my strategy. More are coming just this week. Today is Wednesday. We have tomorrow again. We have next tomorrow. We have next week. Are you getting that now? Just what you need to be risking. Like I bought a $5,000 account from Funded Next and I'm risking only 0.5% of my money. Are you getting me? I decide that this is what I'll be risking to take my trades, and that is what I am doing. And yes, it is working. So if you can be getting this, even if it's 2 to 3 in a week, it can give you like $100 next to the same thing. So you don't need to be in a hurry to pass your proprietary firm. Pass it carefully and then with all consistency. Don't just be in a hurry. I just want to pass my proprietary firm. I just want to pass it within a short time. No, be very careful. I had drawdown, but I'm out of that drawdown. I'm going, and it's gradually. Are you getting me now? So this is it. I'll keep dropping and dropping. If I get to see another one tomorrow, I would definitely drop. I would definitely drop. And by God's grace, I'm going to set a master class where I would explain this in full for like 30 to 1 hour. I will explain it in full and how it works for clarity and for better understanding. All right. Thank you for your time. I appreciate every effort you are putting into watch. The market itself seems to look bored, most especially when it comes to learning. It seems to look like it is a boring place. But I bet you, if you can put in your time, you can put in your effort, you can put in your attention, you'll definitely come out with something positive from the market. So thank you, and God